Hello, welcome to the Stock Play of the Day Overtime. This week on Monday Stock Play of the Day, we discussed the XBI. That is an ETF that tracks the biotech industry. Today we'll discuss, did we score or did we fumble? Hello, my name is Brian Overby. I am the Senior Options Analyst at Ally Invest. All right, so every Monday we have our Stock Play of the Day. This Monday we talked about the XBI. It's a ETF that tracks the biotech industry. And our forecast or our outlook for that underlying was volatility. Well, guess what? Not only did we get some volatility in the XBI, we got some volatility in the marketplace. Everything was getting a little bit frothy, and then we had some bad jobs numbers that were released this week, and that was kind of the tipping point. So not only have we increased the volatility of the overall marketplace, we had the VIX index actually going up a few points, pushing the 28% level right now. We also had that volatility that we talked about in the XBI. What we were hoping for over this week was for some good news to come out about vaccines or any type of drug that might help relieve the pandemic. Overall, though, we just had a lot of froth in the marketplace. So if you look at the chart, which I'm highlighting right now, this is a daily chart starting on Monday. It's a 15-minute lines, 15-minute ticks. If you notice, this is the noon hour on Monday. So this is the rest of the day. So on Monday, we always talk about the stock play of the day at noon Eastern time. So since then, you see all the volatility of the XBI. We actually had a little bit of a run up, which wouldn't have done much to our trade, stayed flat again. And then eventually we had the big downturn. And this morning, we actually see more downturn than we have of every day of the week. So when we did the trade, we were looking for a 7-point move either to the upside or to the downside. Preferably, we'd like it to the upside, but we had some protection in place if the market actually went down by that amount. So our outlook was for volatility. We were leaning to the bull side, but we got the volatility or the movement to the downside. The amount of movement we were looking for was 7 points, and it's moved over 7 points. So let's get into the trade and let's get into that trade a little bit and look at what has happened to the prices of those option contracts. So if I go to the Ally Invest option chains here, we see the XBI is at 111.19. When we did our show on Monday, now the markets are live just like they are right now, the market was right around 119.80. Pretty close to the 120 level, and it kind of fluctuated throughout the show. It's a very volatile ETF, actually. So in general, ETFs are usually less volatile than the marketplace, but obviously the stocks that are in this ETF are extremely volatile. So we did have the market come down, so let's just call it 112 here. So the market came down at least 8 points. So I have the strategy set up. The strategy that we were looking to do is called a back spread with calls. Another name for it is a ratio back spread, or even better, a pay later call. And we reviewed all those names and why they were called that on the Monday show. So if I scroll down, we were looking at the August 7th expiration. More time, or time is your friend on this trade. You have more time for the stocks to make wild swings. And that's really what you're looking for when you're doing the trade. Now, this ETF, or this industry, if you will, has had a lot of news, and it's been very volatile because of that news, because everybody out there is trying to race to the cure for the coronavirus overall. So if we look at it, XBI is at 112.05. So the market has actually even popped since we started the call. It's right at 112.04 right now. We sold the 113 strike call and use those proceeds to buy 2 of the 120 strike calls. So this is the trade as of today. On Monday, we did the trade and we received a net credit to the account on the midpoint. Now, once again, nothing's meant to be a recommendation, so we're always trading these on paper. We're just trying to learn here on the stock play of the day. In this instance, this trade netted at a net credit to the account of 80 cents, or $80 less commission for every 1 by 2 spread that we put on, and hence the name ratio spread. So at this instance, if I look in the right rail, we are down on that position because we put the trade on for 80 cents. Right now, that is trading for $1.70 net credit to the account. And I'm going to scroll down to the profit and loss graph and talk a little bit about what's going on with the trade. So in general, going to the downside isn't bad on this trade. When we set up the trade, the underlying stock was right here. This was the 120 strike. We now see, since this is a live trading platform, we actually see the underlying stock is now down here at 112. So it went from 120 to 112. And we mentioned that at expiration, the dotted line is your profit and loss graph. Now the colored line is in play. So what has happened? It's gone down below our lowest strike, which is a good thing at expiration, but we increased a little bit of volatility. And it happened really fast. There wasn't a lot of time decay. There's still 14 days remaining in the trade. So if the market just stays where it's at or drifts lower, as you can see by today's profit and loss graph, now this is representative of today's prices. If the market just starts to drift lower, this trade will be good. On where our risk is that market actually comes back the 8 points that it took away this week, and in a week's time we end up somewhere in this range. In other words, we get basically we go nowhere in that. It went down 8 points and came back up. That's our biggest risk on this trade so far. So it's a very interesting trade, and it's a very good learning situation. It's very hard to learn from trades that are profitable all the time. So if we get one that goes against us, it's a little bit better learning experience overall. So, and that's what happened here. So we're sitting right here. It's $1.70 net credit, but if the stock just stays where it's at, we would make that 80 cents that we put that initial trade on. Or if the stock continues to go south, or if implied volatility settled down on the option contracts a little bit. So overall, what would I do if I looked at this? Well, when we put on the trade, we talked about this is going to be a 14-day trade. If the market goes up, well, we can get out at any time, because to the upside, if I zoom in on our profit and loss calculator here, on the upside, that's pretty much a no-brainer. As the market goes up, this trade becomes profitable. You can just decide wherever you'd want to get out at, what the exact moment is. On the downside, it's tricky, and it's a very interesting trade in that if it went down, it was going to hurt us to start with, but as expiration approaches, it's going to help us overall. So maybe next week when we come back and do next week's stock play of the day overtime, we might even take a peek at this trade and see where that underlying is at and see how the pricing of the trade works out. So what's the moral to the story here? Well, if we had put on this trade, the market did make the move that we were expecting, in that it moved over 7 points. That's what we were looking for. We were hoping that 7 points would be to the upside, and it wasn't. It went to the downside, but we're still okay on this trade. Right now, we do have a little bit of concern in that it costs us more to close it out than what we initially received when we put on the trade. So we do have a loss on the trade right now, but we're more concerned about the underlying stock actually going back to where it started. Right here's where the underlying stock is at, 112, going back towards 120. If it stays here or drifts lower, this trade is okay. So Moral of the story is we're just going to keep watching it and see what happens with our back spread with calls in the XBI index. Thanks for coming, everyone. Please click subscribe and ring the bell, and we'll see you this Monday at noon Eastern time for next week's Stock Play of the Day. All righty.